So, good morning, Anchal, Sridhar, Anil, Isha, Amar, Nisha, Maithili, Vedant, Vishaka, Sushmita. Good morning, everyone. So, I hope you would have enjoyed the CA Day celebrations yesterday. So, yesterday was CA Day. So, uh, so let's come back to our classes. We were on chapter deductions, right? We had covered till 80G donations. Everyone, any queries till then? Any queries? Anyone, any queries till 80G? Okay. Vishaka, Anil, Sridhar, Anchal, is it clear? Everyone? Okay, clear. Great. So let me share my screen. Okay, I hope the file is visible. Okay. Now we are starting with the next section. Now today we will also side by side complete this summary, and the summary will help you a lot, right? To remember the things. Now today, there are some small sections that we have to discuss, and there is one big section that we need to discuss. So we had covered till 80G. 80G, I think we had written here. Yeah. Your donation to any SSC, and then about the limits, there are no limit. There are two types. In no limit, there were two types. One is 100%. Second one was 50%. And with limit, there was again to 150%. But the exact calculations we have already discussed. Let's move to the next. Now in 80G series as well, see, we had discussed interest had 4 sections. Same way 80G donation series has 4 sections. In fact, I will say 5. So let me just open it. Next section will be 80GG. 80GG. Let's come to page number 60. Sorry. Sorry. 80G, and then let's come to section 80GG. $80GG is in respect of rent paid. This is in respect of rent paid. Tell me, you have covered salary head. If you get HRA, do you get a deduction? If you pay rent and you get HRA, do you get a deduction? Yes, no, maybe. If you pay rent, you get HRA from the employer, do you get a deduction? Then Lakshmi says yes. Right. Now tell me, if you have a place, like let's suppose you have a self-occupied property at that place, will you get a deduction? If you have a self-occupied, let's suppose you are working in Delhi and you have a self-occupied property in Delhi nearby that area, will you get a deduction? The answer is no, because you cannot abuse the provisions. Now it is not mandatory that every person who is paying rent is salaried person. Now that HRA deduction is claimed only by the persons who are salaried. What about other people? What about other people? They also pay rent. Let's suppose I am a businessman I also pay rent for my personal living, but I do not receive any HRA from the business. Now I am not able to get any deduction. Now this deduction is introduced for people other than salaried persons. So it has come to page number 60. Available if the individual HUF exercises the option of shifting out, that we already know. It is only in the old regime. It is only in the old regime. Assessee who is not in receipt of HRA, qualifying for exemption from employer, and who pays the rent on accommodation occupied by him and residential purposes. The following conditions have to be satisfied for claiming deduction under section 80GG. The assessee should not be receiving any HRA exempt under section 1013A, because if he is already claiming the exemption, then he cannot get under this section, he cannot get a double deduction. Now, what were the three conditions in HRA? Can you tell me? What were the three conditions in HRA? Anyone? I would like to test you. What were the three conditions in HRA? 1013A. Actual rent received. Give me the complete Dhanlakshmi. It is the rent received or rent paid, Dhanlakshmi? It is the HRA received, rent paid minus 10% of salary, and then there was one more condition. What was the third condition? 40 or 50% of salary. Now, same types of conditions are here. We will see it. This was in 1013A. Now, correct. Good. The expenditure should incurred by him on rent of any furnished or unfurnished accommodation should exceed 10% of his total income, right? Because here the salary is not there, so we will take the total income after all deductions, excluding section after all deduction in the chapter 6A except section 80GG. This is the same way we calculated for 80G, but here we do not remove the special rate incomes. Here we do not remove the special rate incomes. The accommodation should be occupied by the assessee for the purpose of his own residence. Whatever rented accommodation is there that they are using for their own residence, the assessee should fulfill such other conditions or limitations as may be prescribed, having regard to the area or place in which such accommodation is situated and other relevant consideration. The assessee and his spouse or minor child, or on FGF he is a member, should not own any accommodation at the place. Let's suppose you're working in Delhi. So either you or minor child or spouse just should not own any house in that place where he ordinarily reside or perform duties of his office or employment for carrying on his business or profession. If the assessee owns any accommodation at any place other than that referred to above, such accommodation should not be in the occupation of the assessee. Let's see what they are saying. First of all, it is for rent paid by persons. It is for rent paid by assessee who are not claiming 1013A. Who are not claiming 1013A. Another thing is assessee oblique spouse oblique minor child oblique HUF should not have house at the location of work. right? Because you have your own house and still you are paying the rent, then that is not good. If the assessee owns any accommodation at any place other than the referred to above, such accommodation should not be in the occupation of the assessee, and its annual value is not required to be computed under section 23(2) and 23(4). Let me ask you one question. You are working in Delhi. You are working in Delhi. You have a house in, let's suppose, Indore. You are belonging to Indore, but you have come to work for Delhi. Now, this house, if this house is self-occupied, because this is the house, this is the rented house in which you live. Now, should you claim any other house as self-occupied house? Can you claim this Indore house as a self-occupied house because you're living here? Right? No? Right? So what does it simply mean? So this should not be self-occupied then. Because you cannot show two houses as self-occupied, right? So what is the meaning? So I can simply write one thing. You can claim 80GG if you do not own a house in city where you work or reside. Second, if you own another house in some other city, it should not be self-occupied. It means it should be either let out or deemed to be let out. Either let out or deemed to be let out. Clear? I hope it's clear, everyone. I've written in a very simple format. Now, what is section 23(2)(a)? I think you should know it. Self-occupied property. And where there are two self-occupied properties and one is treated as self-occupied, then it's 23(4)(a). The assessee should file a declaration in the prescribed form confirming the details of rent paid and fulfillment of other conditions with the return of income. They need to file some particulars while filing the return of income. Quantum of deductions. Now, same type here. What we will take here now, let's write Dhanlakshmi, only one house you can claim. See, Dhanlakshmi, only one house you can claim, I believe. I'll just quickly cross check it, but I don't think you will get the deduction in that point of time. If assessee is in Delhi and family is living in Indore, then what happens? Dhanlakshmi, let me note down your question. I'll just quickly cross check it and answer you, okay? Because I need to quickly analyze within the section assessee, Delhi. Okay. Now, these are the three conditions we discussed for HRA. Now, let's write three conditions here. For this section 80GG, similar type of conditions are there. Now, instead of salary, what we will take? Instead of salary, what we will take? Everyone. We can take rent paid minus 10% of total income. after all chapter 6A deduction except ATGG, then instead of 40-50% of salary, we take here 25% of total income, because we are taking for total income. So we take 25% here. Again, total income is as same after all chapter 6A deduction. And the amount, maximum amount is 5,000 per month. Maximum amount, because there is no HRA received here. You're not receiving an HRA. The maximum limit is 5,000 per month. So means they want to give you a maximum deduction of how much for the year? They want to give you for 5 into 12, 60,000. 60,000 is the maximum deduction they want to give you under this section. Clear? Everyone with me till here? We are done with this section. Next. Illustration 15. This is very, very simple. Just 3 calculations they are showing. You can do it as homework. Very, very simple. Just these 3 calculations they are doing. ATGGA. Not too much important, but yeah, we'll do it. Vedant, if you have an house but that is occupied by the family, I need to quickly analyze that scenario. Maybe I'll come back to you on this. Okay. The same question I've noted down, which another student asked. If the assessee is in Delhi, but the family is living in Indore, right? Then what will be the case? Okay. I'll just quickly cross check it. Now we can write it here ATGG. It is for rent paid. Here any assessee, I believe, it should be available to individual HUF, I believe. But it's not clearly written here. I'll just cross check the section language. It should be in the individual HUF only. And payment as for limits. There are 3 limits. Yes, whichever is lower. Because the section will always give you the maximum limits. Next section. ATGGA. ATGGA. What it says. Now, this is for scientific research. If you are giving any donation for scientific research and rural development, donation for scientific research and rural development. Now it says any assessee not having the income chargeable under the head PGBP. Now, if they why they're excluding these people, Amar, you can just leave it for now. I'll just move on. I'll share the notes, okay? Then you can copy it. Now, in PGBP, deduction allowed. Yes. An assessee not having income under the head PGBP, because if they will have income under the PGBP, they will have income under the head PGBP, they will claim those deductions under section PGBP that is covered under section 35. Correct, Vishaka? So that's why those persons are not covered here. Similar to rent, because for rent you get deduction under the head salary, so those people were not covered here, there, and here the people who are under PGBP not covered here. Who makes donations for scientific research or rural development? Who makes donation for scientific research or rural development? Again, it is applicable only if you opt out of the default tax regime. Only in the old regime this is applicable. Now, donations qualifying for deductions. Donations qualifying for deduction. Now you will see here, these all donations are for scientific research or rural development. If you will read this, any sum paid by the assessee in the previous year to a research association which has its subject undertaking of scientific research, or to a university, college, or other institution to be used for scientific research. Such association must be approved under section 35. Any sum paid to research association which has the object of undertaking research in social science and statistical research, university, college, or other institution to be used for research in social science or statistical research. Such association, university, college, or institution must be approved under section 35(1)(3). Any sum paid by the assessee in the previous year to an association or institution which has its objects of undertaking of any program of rural development, it is for rural development, to be used in carrying out of the program of rural development approved by the prescribed authority for the purpose of section 35 CCA. This is for rural development, which has its object of training the persons for implementing programs of rural development. It has been clarified that, now this point, let's suppose, let me take an example here, then come to this point. Let's suppose you donate 50,000 to approved rural development institution. You donate 50,000 to approved rural development institution. Clear? Now, you have made a donation of 50,000. You will get deduction of 50,000. But let's suppose you made this donation on 15th of June 2025. You made this donation on 15th of June 2025. Now, before the end of the year, when you will claim the deduction? You will claim the deduction for previous year 2025-26, and you will file the return after March 26, right? Once the year is over, then you will file the return. Let's suppose the institution's approval was cancelled. This institution was approved for rural development. Now this institution approval was cancelled on 1st of January 2026. Can you see? You will claim the deduction after March, but the approval has already been cancelled in January. Can you get a deduction? Can you get a deduction? See, when did you made the you made the donation in June? At the time of June, was it approved? Yes. So you can take the deduction. Yes, you can take the deduction. Since at the time of donation, it was approved. Institution. Clear? Now come to the book. It has been clarified that the deduction to which an assessee donor is entitled on account of payment of any sum to a research association, university, college, other institution for scientific research, research in social science, statistical research, an association or institution carrying out the program of rural development, or shall not be denied merely on the ground that subsequent to payment of the sum by the assessee, the approval granted to any of the aforesaid institutions is withdrawn. At the time of donation, if it is approved, you will get the donation, even if it is subsequently withdrawn. Clear? Next, to whom you can give contribution? Public sector company. It is into the eligible project for the National Committee of Carrying Out Eligible Project. Again, it has been clarified that deduction to which an assessee is entitled on account of payment shall not be delayed merely on the subsequent payment, merely on the ground that subsequent to payment of such sum by the assessee, the approval granted to the institution is withdrawn. Same point. If you made the payment, then at the time it was approved, you will get a deduction, even if subsequently it was denied. Any sum paid to rural development fund set up and notified under section 35 CCA. Any sum paid by the assessee in previous year to National Urban Poverty Eradication Fund. National Urban Poverty Eradication Fund. Restrictions on deduction. Are we good till here, everyone? Are you with me? What are the restrictions on deduction? That there should be no income under the head PGBP, no deduction. If you have income under the head PGBP, where a deduction under this section is claimed and allowed for such assessment year, deduction shall not be allowed in respect of such payment under any provision of the act for the same or other assessment year. If a deduction you have under this section is claimed and allowed for assessment year, you cannot claim the deduction under any other section. Now, if you make the donation exceeding 2000, it should not be in cash, it should be other than cash, right? If you are making a donation exceeding 2000, then it should be other than cash. Next, do you remember a point for 80G? We discussed a point in 80G that if you claim a deduction for the donation made to the organization, charitable organization, it is subject to the risk management strategy of the CBDT. Once you pass that, then deduction will be allowed in the return. Same is the point here. If you give donation to an institution referred to in 2, right, all those whatever 5-6 points we studied, if you give donation to the institution, the income tax will verify those donations as per the risk management strategy it has formulated, then only it will allow those donations. Clear? Because whenever in the tax return you enter the details of the risk management strategy and everything, then at that point of time, whenever you enter the details of risk management strategy and all those things, sorry, whenever you enter the details of donation, you need to enter all the details of the institution to whom you have given the PAN number and everything you need to mention. Via that, CBDT verifies it, and once it is verified, then they give you the deduction. Is it clear? We are done with 80GGA. I hope it's clear, everyone. So let's make a quick note quickly. 80GGA, it is for any assessee. Donation for scientific research and rural development. That is for any assessee not having PGBP income. Right? Now there is no maximum limit. There is no limit. Whatever donation you have given is the donation equal to deduction. Clear? Let's move to the next. 80 GGB. ATGGB is about deduction in respect of contributions given by companies to political parties. Deduction in respect of contribution given by companies to political parties. If you have given any contribution to the political party, right? 80 GGB. Now there are two sections. One is it is donation to political party. Another section is 80 GGC. It is also donation to political party. Both these sections are for donation to political party. Anchal, you're talking about this section above section 80 GGA. If you give donation of more than 2000 in cash, you will not get a deduction, right? That is a condition inbuilt, right? But there is no maximum limit prescribed. Let's suppose you give by the check any donation by bank, you give donation of 10 lakh, you will get deduction for 10 lakhs in 80 GGA. Clear? 80 GGB and GGC. GGB is for donation to political party. It is when an Indian company gives a donation. It is for the Indian company giving donation. It is for other assessees. It is for other assessees other than Indian company. If you give any donation to the political party, then you get 100% deduction. Both are allowing 100% deduction. Both are allowing 100% deduction. Again, the condition is that no deduction if it is no deduction for cash contribution. It should be in other than cash. Both. Now, what is happening in the market? Let me tell you. I'm giving you a practical scenario, not written in the book. What people did, and in fact, income tax department also knows that, and they are aggressively on it. Now, in ATG, earlier I told you in ATG the donations are very famous because people try to make the fake donations. People try to make the fake donations, right? In ATG, how much percentage deduction we get? For the last category of institution, fourth number category. For the fourth number category of institutions, how much deduction you get? 50%, right? But in ATGGB and GGC, ATGGC, let's suppose as an individual, GGC is applicable, you will get 100% deduction to the political party. What this person does actually, everyone knows it, income tax also knows it. This person gives donation to the political party. This is a political party. And you know the Indian structure, even the finance minister acknowledged in one of the budgets that Indian government in politics the cash is involved, right? There was some section, I'm just not remembering it correctly, but in the political parties, right, there are a lot of cash. There is a lot of cash available with them. Now this person gives donation to them. This person is a salaried person. Let's suppose this person is a salaried person. This person gives, this salaried person, what is their problem? That cannot take whatever salary they earn, they cannot claim any expenses against it, right? If you are a salaried person, whatever salary you earn, you have to pay taxes on it. You cannot deduct any expenses out of it. Now, what this person does, this person gives donation to the political party. Let's suppose his salary is 10 lakhs. He gives donation of 1 lakh. He gives donation of 1 lakh. Now, what this political party does, this has received money in bank account. They've received money in bank account. They have a lot of cash. They want to convert their black income to white income. Very simple. They give them back cash. They give them back the cash. They give back the cash. Now, what is the benefit to the salaried person? They will get a deduction for this 1 lakh because they're looking for deduction. They have a lot of taxable incomes. Let's make it 15 lakhs because till 10 lakhs the tax is not applicable now. Okay, 15 lakhs. Now, what this person does? This person has received a deduction. His purpose is served. Now for the political party, they were having a lot of cash. They got a person that, okay, this person has made us a donation. Now they are able to utilize their cash and their money is deposited in the bank. Right? So this is what was happening in the market. Now what people did practically, people acted too greedy. They have salary of 15 lakhs. Now salaried person need cash for their daily needs. Salaried person need cash for the daily needs. This person gave a donation of 8 lakhs. In any sense, is that justified? You are earning 15 lakh and you're donating 8 lakh. In any sense, can you justify this? The answer is no. People gave donations of 40% of salaries, 50% of salaries to just avoid the taxes. This came in the attention of the government. And then government did a raid on the political parties. They have issued some notices. They have identified the fake political parties we are just created for the purpose of donation, which are not actually contesting the elections. Right? So all this was done. And accordingly, this is how the entire market stopped. So people were not making genuine contributions. That's why the government was fed up of all these deductions, because people are trying to claim the fake deductions. That's why the government said, okay, come to the new scheme. Come to the new scheme, no deductions. Ajal, these sections are still active, but to be true, these are not. To be true, in the current scenario, if I compare the level, what was happening earlier and what will happen now, it will be not even 5-10%. Everyone has stopped doing the political donations for these transactions because government is after these donations. If you do any donation, you will receive a notice. Your case will be opened. Your scrutiny will happen, and you need to prove all the things. But that will not be so easy because everyone knows what happens in the market. Salary persons can claim chapter 6 deduction A, B, D. Arun Sagar, what you are trying to say? I am not getting it. Anil, what political party should show to the government breakup of the donation? Which breakup they will give? That is just a donation. Clear? So this is how these sections were misutilized, but now government has tightened it a lot. Okay, let's discuss it. 80 GGB, deductions and conditions. This section provides deduction for any sum contributed in previous year by an Indian company to any political party or an electoral trust. However, no deduction shall be allowed in respect of sum contributed by way of cash. For the purpose of this section, the word contribute has the same meaning as assigned to in under section 293A of the Companies Act 1956. A donation, contribute means, what is the meaning of contribute? If you are giving any donation, that is a contribution to the political party, or you are subscribing on payment given by a person for carrying out any activity that is likely to affect public support of political party, shall also be deemed to be contribution for a political purpose. The expenditure incurred directly indirectly by a company on advertisement in any publication. If you are doing any advertisement in any publication in the nature of their souvenir, brochure, tract, pamphlet, or the like, by or on behalf of political party or for its advantage, shall also be deemed to be contribution to such political party or a contribution. If you are giving any advertisement in any publication of a political party, that is also deemed as political contribution. And what is a political party? It is as defined in section 29 of the Representation of People Act 1951. Is that clear? Illustration number 16. During the previous year 25-26, ABC Limited, an Indian company, which section will be applicable? 80GGB. They contributed a sum of 2 lakhs to the electoral trust and 25,000 on the advertisement. Now, how much deduction will be allowed under 80GGB? How much deduction will be allowed under 80GGB? Full deduction 2,25,000, 225K, right? This much will be allowed. Tell me, can they also claim this 25K as advertisement expense? Can they also claim this 25K as an advertisement expense? The answer is no. Arun Sagar, how they can claim double deductions once you are claiming the deduction as well and you are claiming an expense as well? You cannot do it. So this expense will not be allowed because you are claiming a deduction under section 225K. If political party is registered under section 29A, then only we will get a deduction on donation. Anchal, needless to say, whenever you organize any political party, you need to register your political party. That registration is done under section 29 of the Registration of People Act. If you are not registered, then I can say I have opened a political party, I'm a political person. It doesn't mean like this. Until unless my political party is registered, I do not own a political party. Clear? Similar section 80GGC. This section provides for deduction for any sum contributed in the previous year by any person to any political party or electoral trust. What is electoral trust? Everyone knows. What is electoral trust? Everyone knows. Yes, political party expenses are not allowed. No, there is a concept of electoral trust. If you remember, okay, by the way, do you guys see news? Do you people regularly see news or updates? Our Lok Sabha elections were in last year. There were Lok Sabha elections, right? Lok Sabha elections were in 24, right? 2024. Let's quickly see. Electoral bonds, Supreme Court judgment. I want to show you the date first. It was in 2024. Supreme Court declares electoral bonds scheme unconstitutional. What happened? Let me tell you. Let's suppose a person is giving a donation. Now tell me this, if any party is receiving a donation, from this is political party, it is majorly about the companies. If anyone gives donation to the political party, companies were required to present in their financial statements. Now there was a transparency in this system. We were knowing who is contributing to which political party. The government created a electoral bonds. They said, now if anyone wants to contribute, if any person wants to contribute money to the political party, they will purchase these electoral bonds. They will give money to this electoral trust, and then this electoral trust will give donation to the further political party. Let's suppose I have purchased this donation electoral bond for party number A. Now electoral bond will transfer this monies to party number A. So they have brought a factor of anonymity here. They were not declaring who is giving the donation and how much and to which political party. So This is the concept of the electoral bond. All this is run through the electoral trust. Now, this scheme is now no longer in India. This scheme is now no longer in India. In 2024, at the time of Lok Sabha elections, this scheme was declared unconstitutional by the Supreme Court. Yeah, electoral trust is like a middleman between this person who is giving donation and to the party. The government tried to maintain the anonymity. Who is giving the donation to which political party? They didn't want to show it. Okay. So this was an electoral trust. Now, this is for the deduction by any person to the political party or to the electoral trust. However, no deduction is allowed if it is in cash. Persons not eligible. This deduction will not be available to local authority, artificial juridical person, or funded by the government. If government is funding any local authority or artificial juridical person, then that is not covered here. What is political party? Under section 29A, Representation of People Act. An individual HF AOP, if they opt out of the, if they have exercised the option of shifting out of the default tax regime, only then they will get this deduction, right? A cooperative society will not be eligible for deduction if it is opt for special provisions of 115 BAD BAE. Clear? So this is about BBC. Sorry, GGC. Now every party knows. Until I'm not sure about the exact current system, how they're maintained, but now there is more transparency. Every party knows that, I cannot say, but yeah, now the electoral bond system is not there, that anonymity is not there. Okay, so this we have covered 80 GGC, GGB and GGC. Now 80 GGB and GGC. It is for Indian company. It is for any person other than Indian company. Sorry, these are for political donations. Right? Now there is no limit. Donation equal to deduction. Clear? Next section. Now this is a very, very important section. Please mark it very, very important. Now I told you there are 3 deductions which are allowed in the new scheme as well. What was the first deduction? What was that first deduction which is allowed in the new scheme? ATCCD2. What was the second one? ATCCH2. ATCCH2. What is the third one? ATJJAA. ATJJAA. This is allowed in new as well as old scheme. This is deduction in respect of employment of new employees. Deduction in respect of employment of new employees. Now, government wanted to promote employment. Like the company is giving the employment, they wanted to promote that thing, that companies should give the employment so that the employment rate can be increased. Now, what they said, if you will give employment, we will give you deduction. If you will give a, now this is first of all available in new scheme as well as old scheme. See, they have maintained this deduction under the new scheme. It means this deduction was important. It means this deduction was important. They maintained it under the new scheme as well, right? Now, if you hire people, now I'll give you the first logic. Let's suppose last year you were having 150 people in your team. Now, current year you hired additional 30 people. You hire additional 30 people, it has become 180. It has become 180. Now, how many new employees you have hired? How many new employees you have hired? 30. On these 30 employees, whatever is their salary, let's suppose their salary is 20,000 per month. It is not for high profile people, okay? It is for lower class people. When you hire the lower classes, now your salary is 20,000 per month. Let's suppose all of them were hired on 1st of April. I'm assuming this is the salary, 20,000 into 12 per person salary into 30 months, into 30 people. This is the total salary that will be paid during the year, during around the year. Now, 30% of it, 30% of it will be allowed in the year number 1. This will be allowed as deduction, 80 JJAA deduction. Anil and everyone, please do focus here. I will not answer any queries in between. Otherwise, you will forget the concept. Anil, please first understand, then we will raise the questions on the section, okay? 80 JJAA. So you will get the deduction of first 30%. In the year number 2, year number 3, you will get the deduction for this 30%. So for 3 years, you will get the deduction for 30%. Now in the next year, let's suppose this was year number 0. This was year number 1. In year number 2, your employees got increased. In year number 2, employee got increased to 200. 200. Now how many new employees you have hired? How many new employees you have hired? You have hired total 20 employees. Their salary is, let's suppose, again 20,000 per month. Now you will get a deduction for this much. This deduction you will get over 3 years. Now this will be now year number 2, 3 and 4. Now in year number 2, how much deduction, total deduction you will get? Year number 2 total deduction. There is one installment coming from last year and then there is current year. So year number 2 total deduction will become this plus this. 36 lakhs. 36 lakhs. Not 40, 36 lakh, correct? Clear, everyone? So this is how this section gives deductions for the employing the new people. This is for increasing the employment. This is for increasing the employment. Now this is the base of this section. When we will study this section, you will find some new things, some additional things you will find that we will cover from the book. Clear? 80JJAA, quantum and period of deduction, where the gross total income of an assessee to whom 44AB applies. What is 44AB? What is 44AB? What is 44AB? Dhanalakshmi, that is 44AD. Presumptive is 44AD. What is 44AB? Audit for books of accounts. We also call it as tax audit. So means this section is applicable. Books of accounts are required to be maintained under 44AA, not AB. AB is for tax audit. If you are required to get the tax audit done, then the 44AB is applicable. If you are required to get the tax audit done, then 44AD is applicable. So I mean, this section is applicable only when you get your books of accounts audited. Where the gross total income of an assessee to whom section 44AB applies includes any income, any PGBP, profit and gains derived from business, a deduction of equal to 30% of the additional employee cost incurred in the course of such business in the previous year will be allowed for 3 assessment years, including the assessment year relevant to the previous year in which such employment is provided. Conditions to be fulfilled. The business should not be formed by splitting of reconstruction of the existing business. It should be a new business. The business is not acquired by the transferee from any by way of transfer as a result of business reorganization. It should be a new business that you set up. The report of accountant. Now, if it is a tax audit, if a tax audit is there, what is the form you get? What is the tax audit form? Do you know the form numbers? A report of the accountant in the prescribed format has to be furnished before September 30th. It is form 3CA, 3CD, 3CA or 3CB. The report is in 3CA or 3CB. Okay. 3CA is for who is required to get the accounts audited under other act. Normally it's companies. 3CB is for individual and partnership and all those assessees. Now, Vedant has a good question. It says I've already claimed that as a salary expense. Will I get the deduction again? The answer is yes. You will claim it as a salary expense as well, and you will get a deduction as well. Here they are giving you double deduction. Right? That is the catch. They are giving you the double deduction here. Because they want to promote employment. Right? Now we were on the report of the accountant giving the prescribed particulars has to be furnished by September 30th. What is the due date of the tax audit? It is normally September 30th. What is the due date of the return? 1 month after this. It will be October. It will be the October 31st. So September 30th is the date here, and October 31st is the return filing date. Next. Meaning of certain term. What is additional employee cost? Total emoluments paid or payable to the employees employed during the previous year. In case of existing business, the additional employee cost will be nil. When it will be nil? When there is no increase in the number of employees as on the last day of the preceding year. If there is no increase in the number of employees, then the additional employee cost is nil. Second, emoluments are paid otherwise than by account pay check. You need to pay the incomes by the account pay check. You need to pay the employees by the account pay check only. Okay, students, one thing I will request everyone. Now I have noticed it multiple times. When I'm teaching the core concept, then some students are continuously busy in typing. I don't know why. You are asking the queries again and again. You're not focusing on the concept. Then you will leave this concept and ask query on this. I have no problem in answering the queries. I will not leave any query unanswered. But if you will continue typing, you're disturbing yourself, not to me. I will just close the chat.
I have a very simple solution. But continuously you are typing if and but. Every section I am noticing students are typing if this is this, if this is this. Firstly, understand what is I am teaching. You are not interested in learning what I am teaching. You are just typing if this happens, if but this happens. I will answer all if and but questions. I am giving you enough time, but please focus on the concepts. You are destroying your concepts, not my concepts. So please everyone, I request everyone, when we are discussing the core of the concept, please do not type the questions. You're doing an injustice to yourself. You're attending the class and you're still not being focused here. I request, I'm not denying to answer any question, but please hold on your questions while we are discussing the core of the concept. If you will keep answering if and but, the concept will not be set in your mind. Then probably you will linger on. And that's how, if you don't understand the concept, you will not be able to attend the exams, to be true. So please everyone, focus. In case of existing business, the additional employee cost is nil if there is no increase in number of employees. If the number of employees has not increased, the additional cost is nil. If you have paid the employees via cash or other than account pay check, then the cost is nil. You need to see only the payments made by the account pay check or account pay bank draft or electronic clearing system. Electronic clearing system can be IMPS, UPI, RTGS, NEFT, BHIM. Right? All these options are accepted. All these options are accepted, but the cash and cash, bearer check, cross check. Is cross check allowed? Is bearer check, cross check allowed? The answer is no. Bearer check or the cross check will not be allowed. In the first year of business, in the first year, all the employees are new employees. Can I say everything is the additional employee cost? Emoluments paid or employees paid or payable to employees during the previous year shall be deemed to be the additional employee cost. In the first year, everything is additional employee cost. Clear? Now, who is an additional employee? An employee who has been employed during the previous year and whose employment has the effect of increasing the total number of employees employed by the employer as on the last day of the preceding year. Now, that is an additional employee. Last year, there were 150 employees. Now, 20 more employees are hired. It has become 170. It has become 170. Now, these 20 employees will get a deduction. But will we get for all these 20 employees? Are all these employees qualified as additional employee? Let's see. First of all, they are increasing the number of employees. It's fine. But exclusions from the definitions means these persons are not covered in the employee. These persons are not covered in the employee. First one, whose total emoluments are more than 25,000 per month. If anyone is earning salary of more than 25,000, if anyone is earning salary of more than 25,000, then that employee is not covered. It means only the lower class employees are covered. An employee for whom the entire contribution is paid by government under the employees pension scheme notified in accordance with EPF. The employees for whom the government is paying the entire contribution under the employees pension scheme. Then if government is the employer and government is paying the pensions for the pension scheme, then again these are not allowed. An employee who doesn't participate in recognized provident fund. If an employee is not participating in the RPF, then that employee is not eligible. You need to participate in the PF. You need to participate in the PF. Clear? So three conditions. If the employee is having salary of more than 25,000, not eligible. If employee is a government employee or where the employee's pension scheme, the government is contributing for the pension scheme, not eligible. If employee is not participating in the recognized provident fund, not eligible. It means employee should participate in the provident fund. Next, very important condition, C. Let's suppose, you know, the last year end. Let's suppose last year there were 200 employees. Now this year end, this year there were only 200 employees. But what I did, there were same 200 employees. What I did is, I said, okay, on 1st of March, I hire 50 employees just to claim the higher deduction. I hire 50 employees. On 1st of March, I hire 50 employees. Now, will I get a deduction for all these 50? There should be some minimum condition that this person has worked for this many number of days. So they say the person should have worked for at least 240 days. Now we are discussing the exclusions. Exclusion says if the person has worked for less than 240 days, not eligible. It means the person should have worked for 240 or more number of days. Clear? Next, if you are in the business of manufacturing of apparel, footwear or leather products, then the employee should have been employed for at least 180, 150 days. Because these are seasonal, some are seasonal businesses, then 150 days is enough instead of 240 days. Clear? Let's suppose an employee is hired on 1st of January 2026. In financial year 25-26, will he complete 240 days? Will he complete 240 days in financial year 25-26? No deduction. But next year, that's what this employee is continuing. 26-27, will he complete 240 days? Right? So for whom? For this person, the answer is yes. Yes, Isha, yes. In 26-27, he is completing 365 days, right? Now for this person, you can claim deduction in financial year 26-27 and further 2 years, because deduction is allowed for 3 years. Because this employee was hired on 1st of January, how can he complete 240 days, right? So for this person, the benefit will not be lost. You will be allowed in the next year. You will be allowed in the next year. So if the employee is employed during the previous year for less than 240 days or 150 days, as the case may be, but is employed for a period of 240 or 150 days in the immediately succeeding year, he shall be deemed to have been employed in the succeeding year, and he would be entitled to an additional 30%. Clear? What are emoluments? Whatever salaries you pay, those are the salaries allowed. Is the employer contribution of PF allowed? Employer contribution of PF, will that be counted in the salary? The answer is no. Employer contribution will not be counted in the salary. Whatever gratuity, superannuation benefits you pay, will that be counted in the salary? The answer is no. Gratuity and all is not counted in the salary. Gratuity and all is not counted in the salary. Clear? And very important, it is allowed irrespective of the regime. Whether you are in the old regime or new regime, it is allowed. I hope everyone clear till here. Okay, now let's do one thing. We will take a break early because I want to give a break here. Then we will do this question, okay? Let's digest this much. Then we will do this question. Clear? Now, if you have any queries, first ask those queries. There is a chance of increasing new employees fake deduction for the sake of deduction. Anil, that's why if you see the condition of 44AB is there. A chartered accountant does the audit of 44AB, right? Now they placed, now when you will see the 3CD form, 3CA, 3CD form, there is a column for deductions as well. What all deduction the assessee is claiming? You need to write there 80 JJA, this much is the amount. So there, you are the one who will check for the fake deductions. You are the auditors, you will check it. If 20 employees left, we hire 20 new employees. There is no additional employee then. If 20 employees left, 20 new employees are hired. There is no additional employee. We see the last year, because see, if one employee left, then one employee joined, then that is the refillment of the other first employee. Then there will be no deduction. Clear? Can an employer benefit from rejoining an employee? Nothing is given, Arun Sagar, but I believe if an employee has left, let's suppose after 2 years that employee has joined again, that will be considered like a new joining only. I believe that will be the answer. Clear? Any other queries? Okay. It is for all kinds of businesses, yes. Just it should be a new business. Okay. Let's take a quick 10 minutes break. Then we will do that example. So it's now not much is left, but there is one major section which is there. 10AA is there, right? We will discuss it after the break. Thank you. So it's 8:12. We will meet after 10 minutes. Thank you. Team, we can start the break. Are you back? Anchal, this question I've already noted down. About the DGG. Okay. Can we start, everyone? Okay. Mr. A has commenced the business of manufacture of computers on 1st of April 2025. He employed 350 new employees during the previous year 25-26. The details are as follows. These are the 350 new employees they have employed. Date of employment is this. It is the regular employee or casual employee. Total emolument per person is given. The regular employees participated in the recognized provident fund, but the casual employees didn't participate. What does it mean? Can you draw some inference from here? These regular employees are participating in the recognized provident fund, others are not participating. Casual employees. It means for casual employees there is no deduction, because only for the employees who participate in the PF will get the deduction. Vedant, it means you have opened a new business. It is not just you have purchased an old business, right? Now, regular employees will be allowed the deduction. These will be allowed, these will be allowed, but casual employees are not allowed. Next, the regular compute the deduction if any available to Mr. A for assessment at 26-27 with the profits and gains derived from the manufacture of computers, that is 75 lakhs, and total turnover is 10.16 crores. What would your answer if Mr. A has commenced the business of manufacture of footwear? Now it says compute the deduction. Tell me, for these 75 employees, will there be any deduction? They are getting emoluments of 24,000. The answer is yes. Right, because emoluments more than 25 are not eligible, up to 25 are eligible. Vedant, for how many years deduction is available? As and when you will add the new employee, the deduction will remain available. Next, 26,000. Is it eligible? More than 25,000 not eligible. These are casual employees anyways, because of the other conditions not eligible. Regular employees, will these be eligible? But think, there was a condition, you should work for at least 240 days in the current year. These employees have worked 240 days, these have worked 240 days, these have worked 240 days. Have they worked for 240 days? They have worked for approximately 180 plus approximately 215 days they have worked. Approximately. You can calculate the exact number. This is less than 240, so this is not allowed. So only these employees are allowed. These are employed on 1st of April 2025. So can we say 24,000 into 12 months into 75 employees? 24,000 into 12 months into 75 employees, coming to 2 crore 16 lakhs. The 30% of it would be allowed as deduction in the current year. The 30% of it would be allowed as a deduction in the current year. Clear? Now it says, what if Mr. A has commenced the business of footwear on? Let's suppose if this is a business of footwear, the condition of 240 days is relaxed. It is just 150 days. It is just 150 days. So even these 100 employees, we can claim deduction. So it will be 24,000 into 100. How many months? They worked for 7 months. So it will be 24,000 into 7 into 100 plus the earlier one. The total will become 3 crore 84 lakh. The 30% of it would be allowed as deduction. Are we on the same page? Clear? Okay. Next, 80 QQB. Very simple. Now these 3-4 deductions are very simple. Which employees didn't work for 240 days? Anchal, which employees didn't work for 240 days? These 100 employees, they're in the business of footwear. In the business of footwear or clothing, it is the condition of 150 days. Have they worked for 150 days? Have they worked for 150 days? 25, if they worked for more than, if they've earned more than 25,000, then they're not allowed. It is only for lower level employees. So these are eligible. This 125 employees are not eligible because of this condition. Okay. Deduction in respect of royalty income. Now there are two sections. AT, QQB and RRB. ATJJA is always examiner favorite. Please do remember, okay? ATQQB and RRB. It is for royalty of authors of certain books other than textbook. If you are an author, you receive royalties. If you are writing the books, you receive royalties on the books, right? As and when the books are sold, you get royalty. Now they're giving you a deduction for the royalty income. They're giving you the promoting that you write the books. You write the book other than textbooks. And whenever you will sell it, you will get royalty income. For that royalty income, we will give you a deduction. Now it is for the individual resident. It is for the individual resident. Right? Again, it is in the old scheme. Needless to say, it is the maximum limit of deduction that you can claim is 3 lakhs. 3 lakhs. Or income derived, whichever is less. Let's see the book. Eligible assessee in quantum of deduction. 80 QQB. Maximum deduction is 3 lakhs to an individual resident in India in respect of income derived as author or joint author. There is a deduction shall be income derived as author or joint author or 3 lakhs, whichever is less. Eligible income. This income may be received either way of lump sum consideration for the assignment or grant of any of its interest or copyrights of the book. If you are getting any lump sum consideration, let's suppose you have sold your book rights, you get 10 lakhs of income. Let's suppose you have sold your book rights, you are paid as a royalty of 10 lakhs. From this maximum 3 lakh you can get as a deduction. So only 7 lakh will be taxable. Only 7 lakh will be taxable. So maximum 3 lakh deduction you can get for the royalty income. Such book should be work of literary, artistic, or scientific nature, or of royalties or copyright fees, whether received in lump sum or otherwise in respect of such book. This deduction shall not, however, be available in respect of royalty income from textbook, for schools, for guides, commentaries, brochures, diaries, magazine, newspaper, journal, pamphlet, tracts, and other publications of similar nature. This is not available for school books, textbooks, magazines, and all these are not applicable. Where the assessee claims deduction under this section, no deduction under any other act, any other provision of the Income Tax Act is allowed. Now there is one more condition. See, there are two types. When you receive the royalty in lump sum, when you receive the royalty with per book, right? When you receive not eligible income, one is you receive royalty with every, one you receive is lump sum, then another one is royalty. It is normally not lump sum. You receive royalty but not lump sum amount. When you receive lump sum, let's suppose you have given your book rights. Now whatever whatever books they print, you will get this much money only. One time you get it. Lump or royalty not lump sum means with every book sold, let's suppose you get 20% of the income. That is royalty per book. If it is lump sum, there is condition of only 3 lakhs. Maximum limit is 3 lakhs. If the royalty is paid not lump sum, if royalty paid is not lump sum, then in that scenario, maximum limit is 3 lakh. If it is royalty paid is not lump sum, then in that scenario there are two conditions. Maximum limit is 3 lakhs, that remains, plus the royalty cannot exceed, the deduction will be maximum for 15% of value of books sold. 15% of value of books sold. Let's suppose you are getting 20% of the royalty on the book sold, per book sold. For the purpose of deduction, you are getting 20%. For the purpose of deduction, we will take only 15%. For purpose of deduction, we will take 15%. Clear? For the purpose of deduction, we will take 15% only. Are you with me till here, everyone? Now we will do a question as well. For the purpose of calculating the deduction under this section, the amount of eligible income, royalty or copyright fee otherwise than by way of lump sum, shall not exceed the 15% of the value of books sold. However, this condition is not applicable where the royalty or copyright fee is received in lump sum in lieu of the rights of the author of the book. This condition is not applicable if it is received as lump sum. 15% condition is not applicable, but 3 lakh will remain. Now, assessee shall have to furnish a certificate in the prescribed format in the manner given in the with the tax return. Now, this condition is also very important. Period of repatriation, where the assessee earns income from outside India, where assessee earns income from outside India. If the royalty is received within India, we have discussed. If the royalty is received from outside India, then the royalty, then the income should be brought into India in convertible foreign exchange within 6 months after the year end. Within 6 months after year end. Within 6 months, you need to bring the money in India. If you will not bring within 6 months, we will not allow you the deduction. We will not allow you the deduction. So it says, where the assessee earns any income from outside India, from any source outside India, he should bring such income to Indian convertible foreign exchange within a period of 6 months from the end of the previous year in which such income is earned, or within such period as the competent authority may allow in this behalf for the purpose of claiming deduction under this section. The competent authorities shall mean the Reserve Bank of India or such other authority as is authorized under the law for the time being in force for regulating payments and dealing in foreign exchange. Clear? Any doubts still here? then we will go to the example. First, let me take up the doubts if you have any. Okay, clear. Mr. Akash earned royalty of 2,88,000 from a foreign country for a book authored by him being a work of literary nature. This is not a textbook allowed. The rate of royalty is 18%. Now, what I said, the rate of royalty is 18%. Maximum, how much is allowed? Maximum is 15%. Maximum is 15% allowed. Now, it says the expenditure incurred by him for earning this royalty was 40,000. There is a 40,000 expenditure. The amount remitted into India, out of 2,88,000, only 2,30,000 is remitted to India. Compute the deduction available. First of all, tell me 2,88,000 is the royalty according to 18%. How much maximum will be allowed? Can you calculate 15% out of it? 2,88,000 is for the 18%. Can you calculate the 15% amount? Isha, Sridhar, Amar, you don't have to do it's 2,88,000 is 18% divided by 18%. You have to calculate 15% into 15%. You have to do like this. You don't have to multiply it by 15%. Getting it? So 2,88,000 into 15% divided by 18% is 2,40,000. Means you can get a deduction of 2,40,000. Minus you will do some expenses, whatever expenses are there. But tell me how much money is remitted to India? Only 2,30,000 is remitted to India. So can you claim deduction for 2,40,000? The answer is no. Because see, first we have applied the limit of 18%, 15%. First we have applied the limit of 15%. We have seen only 2,40,000 is allowable. But we have seen only the foreign currency received in India is 2,30,000. So we will take the lower of the two, 2,30,000. From this, 40,000 are the expenses. So net deduction allowed will be 1,90,000. Net deduction allowed will be 1,90,000. Is that clear? Clear, everyone? Next, ATRRB. ATRRB. Now let me write here below only. ATRRB. A similar type of section, it is for the patents. It is royalty on patents. First one was royalty on books, it is royalty on patents. If you have a patent right, if you have a patent, you charge for the use of that patent. Again, if it is to an individual, it is only to a resident individual who is registered as a true and first inventor of the in respect of invention under the Patents Act 1917, including the co-owner of the patent and earning income by way of royalty of a patent registered on or after 1st April 2003. Quantum of deduction, again 3 lakhs. There is no condition of 15% here. So I can say same thing, 3 things here. It is for the individual resident. Old scheme maximum 3 lakh or income derived, whichever is lower. There is no condition of 15% here. There is no condition of 15% here. Clear? Eligible income. This exemption shall be restricted to the royalty income, including consideration of transfer of rights in a patent, of providing information for working or use of patent, or use of patent, or the rendering of any service in connection with these activities. The exemption shall not be available on any consideration for sale of product manufactured with the use of patented process or patented article or commercial use. Conditions. In respect of any such income which is earned from sources outside India, the deduction shall be restricted to the sum which is brought to India in convertible foreign exchange. Same scenario. If it is earned from outside India, you need to bring it to India within 6 months. Clear? So let's write it here. 80, we had written till 80 GGC. 80 JJAA, then it is 80 QQB, 80 RRB, first write for 80 QQB, it is for individual resident. Then payment for maximum limit is 3 lakhs and 15% condition. Other than for lump sum. Here there is only maximum limit of 3 lakhs. 80 JJ is for any SSE. Sorry, it is for deduction in respect of employment. There is no maximum limit here. Or I can say it's 30% of new employees salary. Clear? Let's move to the next series. We only have very simple. Next we have very simple. We are left with 4 deductions: 80 TTA, 80 U, 80 TTB, and 10 AA. 80 TTA. We will do it in a comparison format. 80 TTA. If you remember in the question we did, I said 80 TTA is very common. You will find it in, you just write it in every question. 80 TTA or TTB. These are the similar section. So it is for interest in savings account. 80 TTB is for interest on deposits in case of senior citizens. If you are not a senior citizen, then 80 TTA is applicable, right? It is available to individual HUF. If you have a savings account, interest on savings account is there, then up to, you get a deduction up to 10,000. You get a deduction up to 10,000. Again, it is in the old scheme only. Needless to say. 80 TTB is also for individual HUF. Sorry, it is for the resident individual. It is only for the resident individual. It is for the resident individual, 60 years or more. It is again an area of difference. It is for interest on savings account plus fixed deposits account. It is for fixed deposits as well. It is for fixed deposits as well. Deduction limit for senior citizens are more. Deduction up to 50K, and it is in the old scheme. It is in the old scheme only. Please note it down. Is it clear? ATTTA, it is for the individual HF, old scheme. It is being a individual HF. They have interest on deposits in a savings account. Note the time deposits. Please mark it important. Note the time deposits, which are deposits repayable on allowed expiry of fixed period, subject to deduction of 10,000. The saving account can be maintained with bank, cooperative society, post office. Not available to senior citizen because for them ATTTB is there. For them ATTTB is there. Restrictions: if the aforesaid income is derived from deposit or held by on or behalf of firm AOP BOI, no deduction shall be allowed in respect of such income on the total income of any partner or AOP BOI. Because if deduction is allowed to AOP BOI, then it is not allowed to the partners. In effect, the deduction under this section shall be allowed only in respect of income derived in the form of saving bank made by the individual or the HUF directly. ATTTB, that is for individual, resident individual, 60 years or more, senior citizen. Now it is by way of interest on deposits, both fixed deposits and savings account. For banking company, cooperative society, post office. There is a limit of 50,000. Now this deduction is non-available to the member of partner of the AOP BOI or firm. Clear? So we can write here ATTTA that is interest and savings account. ATTTB is interest on deposits in case of senior citizens. It is for the individual HF. It is for resident and senior individual. Resident individual who is a senior. Let's write it like this. Resident individual who is senior. The maximum limit is 10,000. Here it is 50K. This is ATTTA and TTB. Clear? This question is very, very simple. You can do as homework. Next. This question is again a comprehensive question. Please do it as homework. Illustration number 20. Good question. Okay, next. Other deductions. ATU. What is ATU? We have discussed it earlier. ATU. We had discussed with ATDD. It is for self-disabled. Self-disabled. It is for personal with disability. Deduction in case of person with disability. It is for self. How much will be the deduction? Deduction amount will be same as in 80DD. What was the deduction in 80DD? 75K or 125K if the disability is severe, 80% or more. ATU harmonizes the criteria for defining disability as existing income tax rules. This disability is defined in Person with Disability, Equal Opportunities, Protection of Rights and Full Participation Act. This section is applicable to resident individual. It is only to the resident individual who at any time during the previous year is certified by medical authority to have a person with disability. Now, the benefit of deduction under this section is also available to persons suffering from autism, cerebral palsy, and multiple disabilities. Quantum of deduction. This is a flat deduction, not maximum. 75K, 125K, disabilities severe, 80% or more. Conditions. The assessee claiming a deduction under the section shall furnish a copy of the certificate from the medical authority in the form, right, that you have a disability, and where the certification requires reassessment. It means it is valid for a particular time period. You need to take a new certificate. After the expiry of the period mentioned, you need to take a new certificate. Reassessment, a fresh certificate is required. Clear? Now, if you have any doubts still here, you can ask before we proceed with the last section. Any queries, anyone? Please do ask. If employee joined in last month of the financial year 24-25, then 240 or 150 were freshly counted. Yes. If employee joins in the last month, we see the next succeeding year, we will count fresh from 1st of April. Meaning section number, is that important? Mentioning, yes. If you will mention the section number, you will get good marks. See, everyone revise with me quickly. We had discussed ATC. Now, let me just write the section number. Let me hide all of that. What is ATC? ATC is in respect of some payments, right? You make LIC, PF, and all those payments. Then ATCCC is for everyone. Please do revise. Pension funds like LIC and all. ATCCD was for NPS. ATCCH is for Agnipat scheme, Agniveer scheme, right? So ATCCD is over. ATD, there are 3 sections related to disease. ATD is for the medical insurance. ATDD is for disability of the dependents. ATDDB is for specified disease. Then ATE series, there were 4 sections. ATE is for everyone. ATE is for interest on education loan. ATEE, EE is for house property, home, for financial year 16-17, right? Then ATEEA is for residential home you purchase, the interest on that home you pay for 3 years, 1920, 2021, 2022. ATEEB is for electric vehicle, but there were 4 years. There were 4 years given: 1920, 2021, 21, 22, 22, 23. ATG, there are series of 4 sections. In fact, 5. ATG is for donations, charitable donations. ATGG is for we covered today, rent paid. GGA is for scientific research, and GGB is for political donation by the Indian company. GGC is for other than Indian company. ATJJAA available in the new scheme, that is for new employment. ATQQB is for royalty on books other than textbooks. RRB is for royalty on patents. TTA is for interest on saving account. TTB is for senior citizen interest on savings and fixed deposits. ATU is for disability. ATU is for disability. Are you with me till here? ATCCC also we have covered. Clear? Can we proceed, everyone? Are you with me till here? Can we proceed to a last section? A very important, because this section is very, very important again. Please give your 100% focus here. Do not lose your focus and do not ask me questions on the other sections while I am discussing this. Okay? Now, first I will explain it on the Excel. Section 10AA. It is for deduction under section 10AA. Now, there are some special economic zones. There are some special economic zones. Let's suppose you have a business in the special economic zone, right? There are like special economic zones in India. There are many special economic zones. List of notified SEZs as on 31st December 2025. Let's see this. Right? These are all the special, a big list is there. Now, if you will see here, there is a Noida special economic zone, right? Just take an example of Noida special economic zone. So I have personally visited here as well. So let's take an example. Noida special economic zone. Now, what is a special economic zone? They provide you the benefits. Now, they create an area where they will provide you multiple facilities. Now, their idea to create SEZ is, it is like foreign in India. It is like foreign in India. Okay. They create SEZs. They provide you the benefits. It is an SEZ. They provide you the benefits. Let's suppose you do business from here. From SEZ, you do the export business. If you will do exports from SEZ, whatever profits you earn, profits on export sales, you will get a deduction for it. Let's suppose you have made all the export sales of 100 CR. Your profit is 20 CR. You will get a deduction for 20 CR and nothing will be taxable. You will get a deduction for 20 CR, nothing will be taxable. So 10AA deduction will be 20 CR. Clear? So this is section 10AA. This is section 10AA, 20 CR. Now the idea is you will get a deduction for 10AA 20 CR. Now for the first 5 years, you get deduction for 100% of profits. For the first 5 years, you get deduction for the 100% of the profits. Next 5 years, you get deduction for the 50% of the profits. And further next 5 years, you get deduction for the 50% of the profits, but they're subject to certain conditions. subject to certain conditions. Let's suppose you have a profit of 20 CR. So first 5 years, let's suppose every year you have a profit of 20 CR. Just assume it. Just assume it every year you have profit of 20 CR. In first 5 years, you will get deduction for 20 CR itself. In next 10 CR, you will get 10 CR. Now, the condition is that in the third year, there are additional conditions. They say this 10 CR, you need to pass an entry. Profit and loss debit. You can claim a deduction like this because you have debited the P&L. You have claimed the deduction. 2, there is a reserve that you create. Special Economic Zone, SEZ, Reinvestment Reserve account. Means this 50% of the money, this 10 CR in the 11th to 15th year, you will reinvest it in the SEZ. You will reinvest it in the SEZ. Okay. Now then you get a deduction. Now, if you will reinvest in the SEZ, how you will reinvest? You get a period of 3 years. You get a period of 3 years. You need to purchase and put to use the plant and machinery. You need to invest in plant and machinery in the SEZ. If you will not invest it, we will not give this deduction. If you will not invest it, we will not give this deduction. Clear? So for 3 years, you need to invest in plant and machinery. Now, is it clear till here? First of all, is it clear till here, everyone? Next. Let's suppose from this, it is not mandatory that you do only the export sales from here. It is not mandatory that you be export sales from here. From SEZ, your export sales are, let's suppose 100 CR. Your domestic sales are 150 CR. What is the total sales? 250 CR. Your profit is 40 CR. Can you get the entire deduction of the entire profit? What do you think? Can you get the entire deduction for the entire profit? The answer is no, because there are export sales, domestic sales as well. Can we prorate the profit for the domestic export sales 40 CR into export sales are 100 divided by how many total sales are 250? So 40 into 100 divided by 250. So you will get deduction for 16 CR. You will get deduction for the profit allocable to the export sales. This is profit for export sales. You will get deduction for the 16 CR only. Is that clear? Next. So, okay, one more thing. Here, when we create an account, this is a book account. Some people have a confusion. This is, we are naming it as SEZ Reinvestment Reserve account. We are not opening any bank account. This is in the entry in the books. We are not opening any separate bank account. We are not opening any separate bank account. Clear? I'm skipping the questions for now. I will come to the questions at once. Okay. Next is
let's go to the book for once. Okay, one or two more examples. Let's suppose your total, okay, one more thing clarification. Now you take the, now let's suppose, let me take Freeman example, with that way you will be able to appreciate. You take the profit of the unit into export sales divided by total sales. This is what you took. Now let's suppose an individual has two businesses. An individual has two businesses. This is unit number A. This is unit number B. This is in non-SEZ area, normal area. Non-SEZ area. This is in SEZ area. Non-SEZ area and SEZ area. Now here the turnover is 100 CR. Here the turnover is 150 CR, all export, total export sales. Total export sales. All full 100% export sales. Tell me, when you will do export sales divided by total sales, export sales you will take 100 CR. What you will take as the total sales? What you will take as the total sales? What you will take as the total sales? 150 or 250? See, we are taking the profit of the unit. Whenever for the SEZ unit to maintain separate bank accounts, not 250. See here, let me give you the profits. Here the profit is, let's suppose, 20 CR. Here the profit is, let's suppose, 40 CR. Now you are calculating the SEZ, you are taking the SEZ area profit only. You will take 40 CR into 100 divided by 100 CR only. You will not take it 150 plus 100, 250, because you are taking the unit profit of unit B. This is profit of unit, SEZ unit. Let's write it clearly. Profit of SEZ unit then you will take export sales of SEZ unit and total sales of SEZ unit. Clear? That is how you will do it. That is how you will take it. So sometimes the people get confused. We should take it for total or we should take it only for the SEZ unit. Yeah, total sales is 150. Sorry. This is 150. This was just typo. 150 divided by 150. Clear? Let's go to the book. Okay, Anchal says, why do we call it special economic zones? Because you are getting the tax benefits over there. You are getting other benefits as well. Any other question which I skipped in between? There is no deduction for domestic sales. No, the government wants to promote the exports to the SEZ. They don't want to promote domestic sales. SEZs are promoted from the purpose of exports only. Okay. Next, deduction under section 10AA. It is again when you opt out of the old or new regime, you pay under the tax under the old regime. It is in the old regime only. It is available to an entrepreneur from the export of articles or things or providing any service allowable from the total income of the SSC. Exemption is available to all categories of the SSC. They have a unit engaged in manufacturing or production of article or provision of service. Such SSC should be an entrepreneur in SEZ Act. And they have taken a letter of approval from the Development Commissioner. Essential conditions, it has to begin manufacture or, okay, there is one more condition. This provision has gone sunset. Now,
this provision has undergone sunset. It means now the new units will not qualify here. New units will not qualify here. If you have established your business between assessment year 6-7 to assessment year 2021, then only you will get the benefit. So is this deduction relevant today? Is this deduction relevant today? If this provision has phased sunset in assessment year 2021, is this relevant today? Okay. If this is not relevant, why are you studying it? Anchal, Anil, Dhanlakshmi. See, if you have set up your unit in assessment year 2021, it is for the setting of the unit. You will claim the deduction for the after this year has 15 years passed. After this year has 15 years passed. This is for the first year for the setup of the unit. 15 years are yet to pass after this, so this reduction is still relevant. Your business is old business, you were set up in assessment year 2021. You will still claim the deduction 100%, 50%, and then 50% for 15 years. So this deduction is still relevant. However, in the case, let's suppose you need to set up the unit by March 20, assessment year 2021 means by March 2020. Now there was a letter. However, in case of letter of approval, if you have received the letter of approval before 31st March 20, but if you have begun the operations, you have not begun the operations by 31st March 20, then date of manufacture and production of articles has been extended to 31st March 21. What it says, you have taken approval of SCZ till 31st March 2020, and then you start. Ideally, you should start the manufacture as well from this year. But if you will start the manufacturing or providing services or production of articles, or if you start the manufacturing of articles or you start providing services before 31st, they're giving you one extension of 1 year before 31st March 2021 as well. It's fine, you can get a deduction because this provision was going under sunset. So they said we are allowing you 1 more year. If you have already taken approval till 31st March 20 and you are starting the manufacturing or you're starting rendering the services before 31st March 21, you can get a deduction. You can get a deduction. Any business you do in the SEZ area, there is no specified business list. Any business you do the exports, you will get a deduction. But for the same business, you cannot get double deductions. Please do remember. The assessee should furnish in the prescribed form 44AB. Again, here as well, tax audit is mandatory. The persons need to get the tax audit done, right? 1 month prior to the date of the return due date is October 31st. So 1 month prior is September 30th. So you need to furnish the tax audit by September 30th. No deduction under section 10AA would be allowed to an assessee who doesn't furnish a return of income. If the assessee is not filing the return of income, the deduction will not be allowed on or before the due date. So you need to file the timely return. You need to file the timely tax return. Next, deduction under section 10AA would be available to the unit if proceeds from sale. Again, same, you should receive if whenever you are doing the exports, the government wants the foreign currency should flow in India. The foreign currency should come in India. It should come within 6 months from the end of the previous year. If it is coming late, then the deduction will not be allowed. Plus, if government allows, you can keep the money outside India in a separate bank account. The exports proceeds from the sale of provision of services shall be deemed to have received in India, where such export turnover is credited to a separate account maintained for that purpose by the assessee with any bank outside India with the approval of the Reserve Bank of India. Meaning of competent authority. Competent authority means RBI of any such authority as is authorized under any law for the time being in force for regulating payments and dealing in foreign exchange. Clear till here, everyone? Yes, no, maybe. Period for which deduction is allowed 100% for the first 5 years, then 50% for the next 5 years, the next 50% for the next 5 years. If the amount is, if you need to create a special economic zone reinvestment reserve account in the books, a book entry you need to pass, and then this money you need to utilize further, which we will see further. If a okay, Anchal asks, if a business is starting in 2026, see, you have to take the SEZ approval. SEZ approval was to be taken till 31st March 2020. Now, if you are starting a business today, no deduction will be given in under this section. Anchal, new businesses are not approved under this section. If you have taken a SEZ approval by 31st March 20 and started operating by 31st March 2021, then only this deduction is available. That is called sunset, because these provisions have faced sunset. See, not only this, there were many other provisions which are not in the curriculum, ITL and all, they all have faced sunset. Because the government wanted to promote the infra first, they gave deductions. Now they said, okay, we have those much in those infras, and now they're not giving deductions on it. However, below section 10AA clarified that the amount of deduction in AA shall be allowed from total income of assessee computed in accordance with the act before deducting the provisions of the section, and deduction the section 10AA should not exceed the total income. Means deduction will not create the losses, right? Conditions to be satisfied for claiming further 5 years after 10 years. Now I said the money should be, they should be credited to the special economic zone reinvestment reserve account. That is like a book entry you do, but this money you need to use to acquire machinery or plant which is first put to use before the expiry of 3 years following the previous year in which the reserve was created. Within 3 years, you need to purchase the machinery and acquire the machinery and put to use it. You need to put to use it. Until the acquisition of the machinery or plant for the purpose of business or undertaking, it should not be used. Okay, money should not be used for distributing the dividend, for remittance outside India, for creation of any assets outside India. It should be used in India for the acquiring the machinery or plant. Clear? That's what we discussed. You should acquire. We need not, sorry, 3 years invest in plant and machinery. Within 3 years, you need to invest in plant and machinery. Instead of plant, yeah, right. Clear? If an export business is started in the previous year 25-26, no deduction. Yes, no deduction. Again, Dhanlakshmi, it is not for the export business. Please keep in mind. Let's suppose I am sitting in a normal area. I am sitting in a normal business area and I'm doing exports. I cannot claim this deduction. This deduction is available only when you are in the SEZ area. This deduction is available. Please write it down. This deduction is not available for all exports, but it is specific to businesses established in SEZ area. Clear? Next. Now this is very simple. The particulars may be specified. New plant and machine. You need to give all these particulars to the CBTT. Certificate of misutilization. If you do not utilize special economic zone reinvestment reserve account, if it is not utilized for the purpose referred, or if it has not been utilized within a period of 3 years, it will be, amount will be deemed as income. It will be deemed to be the profits, and it will be charged to tax accordingly, because whatever deduction was given, what will be taken back from you. Computation. Profits of unit in SEZ, very important, not all the units, only for the SEZ unit. You need to maintain separate books of accounts for the SEZ unit. Then export turnover of SEZ unit, total turnover of SEZ unit. Clarification on issues relating to export of software. If you are selling of the software, computer software outside India, that is also counted, that business is also counted. Section 10AA provide deduction to assessors to derive any profit from the gain or article or services, including computer software. Computer software is also included in the services. From the year in which the unit begins to manufacture or produce such articles or things or services, as the case may be subject to fulfillment of prescribed conditions. The profits and gain derived from the on-site development. Let's suppose you have got a project in USA. Let's suppose you have got a project in USA. Your team is going in the USA and building the software in the USA. Still, you will get a deduction. The profit and gain derived from the on-site development of computer software, including services for development of software outside India, shall be deemed to be the profits and gains from the export of computer software outside India. Meaning of export turnover. Let's suppose in the exports, tell me, while doing the exports, you are charging like this. While doing the exports, you are charging like this. 1 second. You have charged 10 CR for the exports, plus you have charged 1 CR for the freight. How much will be your export sales? You have charged total 11 CR. You have done total billing of 11 CR to the client. 10 CR is for the value of the sales, 1 CR is for the freight. Your export turnover will be 10 crore, 1 crore or 11 crore. It will be 10 CR. These freight charges are not included in the export turnover. It will be the 10 CR. So it says meaning of export turnover. It means the consideration in respect of export by the undertaking, being the unit of article or things or services received in India or brought in India by the SSC in convertible foreign exchange within 6 months from the end of the previous year, within such period as competent authority may allow in this behalf. It doesn't include the freight, telecommunication charges, insurance attributable to the delivery of articles or things in the foreign exchange in the rendering of services, including computer software outside India. Now there is a clarification that CBDT has given. Export turnover does not include freight, telecommunication charges or insurance attributable to the delivery of articles. Next, CBDT has wide circular 4 by 2018 clarified that freight, telecommunication charges and insurance expenses are to be excluded from the export turnover and total turnover. Let's do an example. Let's suppose this is the question. Total turnover 100 lakhs, export turnover 80 lakhs, telecommunication charges relating to exports 5 lakhs, business profit 20 lakhs. Now what you will do, whatever charges are relating to the exports you have charged in above, you will exclude it. So you will do 20 lakhs into, you will reduce the charges 100 minus 5 divided by, you will also, sorry, exports turnover was 80. You will do 80 minus 5 divided by, you will do 100 minus 5, right? That is how you will calculate. So you will calculate like this, 20 into 80 minus 5 divided by 100 minus 5. The answer would be 15.7895. For these many lakhs, for 15.7895 lakhs, you will be allowed a deduction. So you need to adjust the charges, whatever all additional charges you charge. That is not included in the export sales or the total sales. Clear? Everyone clear? Restriction on other tax benefits. restriction on other tax benefit. Now tell me, if a business is having losses, can you carry it forward? The answer is yes. The normal provisions will apply. If there is a business loss or a under section 72(1), or there is a capital gain, capital loss under section 74(1), then you can carry it forward as normal. You can carry it forward as normal. There is no special restriction on it. Next, tell me, if you are now you are taking a deduction for the profits, will you charge depreciation? Now, can you do one thing? Let's suppose we are saying my export income is 100 lakhs. My expenses are 60 lakhs. My depreciation is 5 lakhs. My net is 35 lakhs. Now I am saying, okay, anyways, I am claiming deduction. I'm claiming 10AA for 35 lakhs. I'm claiming 10AA for 35 lakhs. Now what I say, my export is 100 lakhs, expense is 60 lakhs, depreciation I'm not charging. I'm not reducing my capital base. I'm declaring my profit to be 40 lakhs, and then I will claim the deduction for 40 lakhs. Is that allowed? Will they allow this? They will say no, you need to charge depreciation. We will assume as if the depreciation has been charged. This is not allowed. So it says during the period of deduction, depreciation is deemed to have been allowed on the assets, and written down value shall accordingly be reduced. Written down value shall accordingly be reduced. No deduction under section 80IA, 80IB. If you have already taken deduction under 10AA, then you can take deduction under 80IA. You cannot take double deductions. Now, have we discussed a case? If you remember, on one of the sessions we discussed, it was, I think, in 27th June class. I discussed people try to shift the profits. You remember? Where is that? We discussed people try to shift the profit. They use the transfer price, something that we discussed. I think, where is that? We discussed it. Yeah, here only. In 28th June only we discussed there is a normal business, there is an infrastructure business. People try to inflate the profits of the infrastructure business because they will get the reduction here and they will reduce the profits of the normal business. Is that allowed? The answer is no. So there is a concept of transfer price. The same concept is applicable here for the 10AA. If you are doing any inter business transfer of any goods or service from an eligible business or any other business carried on by the assessee, you need to use the market value. You need to use the market value. If you will not use the market value, then the assessing officer may reasonably assess it. Clear? And if you are already claiming deduction under section 3580, there is no deduction allowed under this section. Right? Someone asked about the specified business. If you are already claiming deduction under section 3580, you are not allowed this deduction. Clear? Then if the business is getting closed, let's suppose amalgamation or demerger, everyone understands? Let's suppose there is company A and there is company B. They are getting merged. Now let's suppose there is company A and B. B is getting merged into A. Now A will remain. But B was a SEZ unit. Now still they will get still B will not, now after the amalgamation B is no more because B is merged in A. A will get the deduction for the SEZ unit. Clear? So In the event of undertaking being the unit which is entitled to deduction being transferred before the expiry of period specified in this section to an undertaking in a scheme of amalgamation or demerger, no deduction is allowed to the old company, amalgamating company or the demerged company, but deduction will be allowed to the new company, that is the amalgamated or the resulting company. Let me take an example of demerger as well. Let's suppose a company is there, ABC. ABC Limited is the company. Now, ABC Limited is doing two types of businesses. They are in a one SEZ business. Their one business is into the SEZ, and then another business is into the normal business. Now, this company was finding it difficult to manage two businesses. What they said, okay, we are demerging it. Now, this business we are demerging. We will form a new company, SEZ Limited. We are forming a new company, SEZ Limited, and we are transferring the SEZ business to new company. Now, earlier to ABC, the 10AA was available. Now to ABC, the 10AA will not be available to ABC Limited, but it will be available to the resulting company. It will be available to SEZ Limited, but it will be available to SEZ Limited. Clear? Okay. Now this is the entire section. Let's do this question. Total turnover of unit A located in SEZ 100. Profit of unit A is 30. Export turnover received before 30 is received within 6 months is 50. Now you will get deduction for entire 100 or only for 50? 50. Total turnover of unit B. Is unit B relevant? It is a normal area, domestic tariff area, normal area, not relevant. What is the profit we have? 30. What is the total turnover of the special economic zone unit? 100. How much is the export turnover received? 50. So you will get deduction for how much? 15 lakhs. You will get deduction for 15 lakhs. 15 lakhs is the profit. Sorry, 15 lakh is the profit. But this unit commenced operations in 1920. They commenced operation in 1920. First 5 years are gone. Now next set of 5 years is going on. How much deduction is allowed? 50% deduction is allowed. So the answer will be 7.5 lakhs. So the answer will be 7.5 lakhs will be the deduction allowed. Clear? So this is the entire chapter that we have done. Now this is a quick summary. You can read it. And we have also prepared a summary here. This summary file, I'll just quickly cross check one or two things which I've highlighted in yellow. Then I will upload this summary as well. Please wait for the summary notes. I will upload it by the evening or by tomorrow. Okay. $10 is to any SSE. It is for export sales from SEZ. Okay. I hope you would have enjoyed this chapter. I've tried to write down multiple things. I have tried to write down many things which I could. So I hope you enjoyed the session. Any queries? If you have, you can ask. These class files I will upload just after the session, but it will take some time to reflect on your portal, because once it is approved by the team, then it will be reflected on your portal. So just wait for some time, okay? Anyone, any queries?
Sir, actually, I have a little bit doubt regarding the section 80 CC. 80CCC. Sir, you mentioned that it's only available for self. In case the person is paying any premium for the LIC, otherwise any other insurance companies for the deferred annuity,
That
it's
is for the
only available for
pension funds.
pension. But I think it's available for in case if they paid for the spouse and kids also maybe. Because the same concept is covered under 80C.
80C is for life insurance premium. It is for pension funds. Actually, I was also having a little bit confusion to be true. If you will see, I have marked it in yellow. I've already marked it in yellow. I'll just quickly cross check it, and then only once it is confirmed, then I will upload this file. Okay.
Sir, because the same one is covered under 80C as well. You mentioned that.
No, you cannot
So,
compare it like this. You cannot compare one section with the other. No, do not do that.
okay, sir.
Okay. You cannot compare like this. Whatever is written in the law, we need to use. We need to work accordingly.
Sir, actually, you also mentioned that you can claim only one section, otherwise 80CC, otherwise 80C. So that reason.
See, for the same premium, you cannot claim two. If you are depositing the life insurance premium, right? So if you want to claim, anyways, the total limit is 150K only, right?
Yes,
If
sir.
you are depositing for the pension fund annuity plan of the LIC, it is specifically for the annuity plan of LIC of India or any other insurance receiving pension from the fund. It is for the pension funds. Now, here, other than pension fund, if you are taking any other life insurance policy, that will be covered here.
No,
If there,
sir, pension premium also is cover 80C.
but if anyways, the total limit is 150K, right?
Yes, sir. Yes, sir.
Total limit is 150K. Now, it's anyways, if you claim 80CCC or 80C, the total limit is 150K. So that will not make any
Yes.
difference.
Yes, sir. Sir, I have one more query regarding the gross total income. Sir, while calculating adjusted income for 80G, okay, they clearly mentioned that we need to remove the exempted income, but we are not going to consider the exempted income while calculating the gross total income.
Yes, anyways, it is not included. So that is fine. That is what I explained. Exempt income is anyways not included. So even if it is not written, we would have not considered that.
Okay, that's it. Thank you, sir.
Okay, thank you. Anyone else? Any other queries? I'm waiting for last 1 minute. I hope your preparations are going on good. Any exam tips or anything, any other query from in relation to exam or anything preparation related? Whatever I can answer, I'll try to answer. Okay then. Thank you very much, everyone. Meet you next. I think the next session is on today's second. The next session we have is on 4th Saturday. The Saturday's timings would be 11 a.m. Right? You know, Saturday's timings would be 11 a.m. Anil, there is no need to practice the questions from the CA final, but if you still want to practice more on the deductions, you can. Okay. So next session will be on Saturday. It will be 11 a.m. to 1:30 p.m. Okay. So thank you very much, everyone. We will start the next chapter of Advanced Tax TDS and TCS in the next session. Team, we can close the session. Thank you, everyone. Technical team, we can. Okay. Thank you.